This is what most traders use to close their successful trades, and in the next few minutes I'll tell you about the most important tools in trading with which you can start trading tomorrow. Hello my lovely friends, my name is Olivia and I'm a professional trader. Yes, I make a living by trading and create complete financial freedom for myself. And beside it, I tell how I do it on my channel and in my group of like-minded people in Telegram. So subscribe it if you're really interested. Today I will explain to you in details everything you need to know about technical analysis, and by the end of this video you will understand how to use it in your trading session. So let's get started, friends. So, what do you need to know about technical analysis? After watching a lot of videos on YouTube, I realized that few bloggers give basic knowledge of what a novice trading really needs to know. So let's figure it out together and answer the question: how to make money on trading quickly and effortlessly with a technical analysis. Most of us, friends, know that trading is the purchase and sale of financial assets on the market, and technical analysis is one of the main methods of analyzing and forecasting future prices on these markets. Therefore, in order to trade, you need to understand the basic rules about this type of analysis. Everything is in the price, friends. Technical analysis believe that all the factors that affect the price have already been taken into account in supply and demand. Yes, that's why it doesn't matter to them for what reason the price has risen or fallen. Only the price change itself is important. Price movement is subject to trend. Price do not move randomly, friends, but obey certain patterns. It's important for a trader to recognize the trend in time and join it before it turns around. The history of price dynamics repeats itself. People trade in the market and they tend to believe and in a similar way in certain situations. So the past repeats itself. Technical analysis can be applied to any type of asset. Technical analysis study price movements on stock, commodity, currency and future markets. In addition, it's believed that technical analysis can be used for any period of time. Do not confuse technical analysis and fundamental analysis, friends. The difference is that technical analysis uses only prices data to determine future prices trends, while fundamental analysis uses economical data and so on. In simple words, fundamental analysis studied the causes of price changes, and technical analysis studied the consequences, friends. In addition, you need to clearly understand which trading method you choose for yourself. Of course, as a rule, technical analysis is used for trading and short-term investments. Fundamental analysis is used by long-term investors who can ignore short-term price fluctuations. Most often, regardless of the method, technical analysis is carried out on charts, so it's important to be able to understand and distinguish them. A line chart is a straight line that most often connects the closing prices of the financial asset. Many analysts believe that closing price are the most important. Liner is the simplest type of graph. Periods are indicated horizontally and prices are indicated vertically. Bars are a type of chart on which each time interval is represented by a vertical bar. The upper point of the line is the maximum price, the lower point is the minimum. The opening price and closing price are plotted on the left and right with the horizontal dashes. Bars were popular with analysis before candlestick chart appeared. A candlestick chart is a type of chart very similar to bars, but colored rectangles are used instead of dashes, so these charts are called candlesticks because rectangles have dashes at the top and bottom. The rectangle is called the body of the candle, and the lines above and below are called shadows. Yes, candle shadows show the high and lows of the price for the selected period, and the body of the candle shows the opening and closing prices, right? Depending on the settings of the trading system, the color of candles can be changed, of course. Now we are ready to move on to the main method of this analysis, but before we start, I would like to remind you about my absolutely amazing Telegram channel because there is really a lot of useful information. In addition, for your convenience, I have collected all the information from this video into a single file so that you can return to it at any time and refresh your knowledge in memory, friends. I also left it in the Telegram for download. So right now, you can put the video on stop, subscribe to my channel using the link in the description, and friends, to be sure to come back to me for the most interesting information. Let's continue right now. So let's continue. Technical analysis study prices on charts. They also use indicators and oscillators. They combine different technical analysis tools with each other. The classical graphical method of technical analysis appeared first, and until the 1980s there were no personal computer, no, right, on the stocks exchange, and analysis built charts by hands, and technical analysts who worked only with graphs were called graphists, and they believed that the price movement is due to the collective actions of market participants, which are not spontaneous, and the chart shows not only compressed price history, but also the main patterns of people's behavior. Yes, graphic traders find trading ranges on charts, determine current trends, predict breakouts and reversal, and so on. Algorithmic or mathematical methods of technical analysis began to develop rapidly after computers appeared, because computers can quickly perform complex calculations. And friends, the main tools of mathematical analysis are indicators, of course. Indicators track the beginning of a trend and its ending and reversal. They help traders to see a new trend as early as possible and join it. Yes, the simplest example of an indicator is a moving average. Indicators can give a diverse set of signals. For example, like signal line crossing or divergence and so on. Candlestick analysis use models from one or more candlesticks to analyze what is happening in the market. Candlestick charts are combined with other technical analysis tools, work on any time intervals and financial instruments. There are reversal models of the current trend and continuation models. Models can consist of one or more candles. Not only the color is important, but also the ratio of the candle body and its shadows, as well as the place where the candle is located in the chart. In addition, friends, there are many figures or patterns on the chart that can signal an upcoming price change. And after these figures appear on the chart, traders using this direction of technical analysis, right, begin to open or close position. Examples of such characteristic figures can be double top or bottom, head and shoulders, rising or falling verge, and others. And you know, price action is based on the basic concepts of technical analysis: support and resistance level, double or triple peaks, friends, and short round numbers. Fake and true breakouts in the method analysis do not use indicators because they believe that all indicators are late. Traders make forecast based only on the price chart. They analyze supply and demand, the current trend, candlestick patterns, and levels, of course. Technical analysis is a truly broad topic that has many tools and pitfalls. I explain many of the tools in many videos. I often use indicators, support and resistance level, candlestick patterns. So you can use this information, but I would also like to recommend some books that you can dive even deeper into this topic. And as a rule, in order to understand the work of a particular tool, you need to turn to the original source, friends. Barbara Rockefeller, Technical Analysis for Dummies, the basic of technical analysis for beginners, will be used for those who are just starting their way in trading, friends. Jack D. Schrager, Technical Analysis Study Guide. This is a huge book that is extremely useful for traders. The book outlines the basic concepts, methods, indicators, trading techniques, practical advice is given in the field of building trading systems. Amazing. John Murphy, Technical Analysis of Future Markets Theory and Practice. It is the main textbook of technical analysis which analysts recognize. It discusses in details and in an accessible form the theoretical foundations of technical analysis and methods of its practical applications, friends, including the interpretations of signals. The book focuses on futures market, but the basic principles given in it are useful for technical analysis and other tools. So friends, that's all for now. Write in the comments if this video was useful to you and if you want me to analyze each of the methods in more details. Be sure to subscribe to my channel. Go to my Telegram, friends, Telegram channel to receive useful posts every day, as well as free signals for your earning. And friends, watch my other videos to better understand trading and make money with me. So I'll see you soon and bye bye.